Lavelle, Jackson Hewitt, franchisee owner. If you have tax debt, you might be asking yourself, how can you settle your tax debt? Four common reasonable collection alternatives are recognized by courts: payment in full, an installment agreement, an offer in compromise, and a temporary delay of collection. Payment in full means exactly what it sounds like, while installment agreements and offers in compromise, OICs, are ways of paying down your tax debt. If you are current on all your tax returns and your debt is manageable, but you just need a little more time to pay it off, you can request an installment agreement. With this method, you can make monthly payments until your debt has been satisfied. However, you will have to pay a fee to set up the plan, and you'll also have to pay interest and a late penalty. It is within the IRS best interest to efficiently collect tax on behalf of the government, encourage voluntary compliance, and promote reasonable fairness and consistency. To that end, the IRS does allow certain taxpayers to negotiate their debt to mutually benefit the IRS's collection goals and the taxpayer's reasonable ability to pay. While the IRS will not traditionally forgive debt, they are willing to negotiate. Because of that fact, debt settlements and resolutions remain important assets for taxpayers looking for much needed relief for their situation. Let's go over what an offer in compromise is. An OIC represents an agreement between you and the IRS. It means you can settle your debt for less than you originally owed, so long as you meet certain requirements. Paying your tax debt would create an economic hardship. You have unusual expenses due to catastrophic issues such as a seriously ill family member. You live in a disaster area, etc. Your income has dropped substantially due to unforeseen circumstances. You have little or no assets, or your assets have little or no equity. Before the IRS can consider your offer, you must have filed all required tax returns. You are not eligible if you are in an open bankruptcy proceeding. In addition to the traditional OIC, there is an OIC for doubt as to liability. This may apply when you dispute the existence or amount of a tax debt. If the existence or amount of the debt has already been established by a final court decision or is based on current law, doubt as to liability cannot be considered.